Well, home sales in Canada posted their first year-over-year rise in 2 years, and average home prices saw their first year-over-year gain in a year. That's according to the Canadian Real Estate Association's housing market report for May. So what is the outlook for Canada's housing market after the Bank of Canada raised interest rates at its last meeting, reversing its previous pause? For more details, joining us now is Shaun Cathcart, senior economist at the Canadian Real Estate Association. Thanks so much for making time for us again, Shaun.
Hi, Jacqueline.
So with what we're seeing with prices, I do think that's particularly interesting to see that year-over-year price gain. However, last May, prices were starting to come down. So this isn't, gains above the pandemic peak at this point.
No, not yet. And the average is heavily influenced by Toronto and Vancouver that have seen their sales recover faster than a lot of the rest of the country. Obviously, they had a much bigger hole to dig themselves out of. And so that average is kind of being pushed higher faster than what's going on with actual prices. But if you look at the MLS Home Price Index, that's been up 2% 2 months in a row. Those are big gains. And, if that pace were to continue, we'd be back at that peak by the end of this year. I'm not saying it will. To your point about interest rates going back up, that probably going to get another one in July, right? I don't think the Bank of Canada is going to want to wait until the end of the summer to hope that all of those things that are too hot cool down. So we get another one in July. I suppose really it's about how buyers perceive that. Is this another cycle or is this two and done?
Yeah, so I mean, in May, we weren't at this point with the Bank of Canada having hiked rates again. So do you think that really will change things potentially, the rate hike last week and the possibility of another?
Yeah, it could, but my guess at this point would be that prices just don't rise as fast and sales don't rise as fast as they would have otherwise. I think that there's a lot of demand out there. There's not a lot of supply, and I don't think that's going away. I think that most of the damage from this unprecedented in a generation rate hike cycle has been done, unless the rest of this year and into next year something happens that financial markets are not anticipating at this point.
You talked about the strength, at least when it comes to prices, coming from some of those major markets like Toronto and Vancouver. But where is the most activity happening right now? Is it in the same places?
Oh, no, I think the winner for that one is Calgary and other parts of Alberta, but definitely Calgary, where, it's almost like, I remember when they brought the stress test in, and I joked that, the Maritimes, the eastern part of the country didn't get the memo, and they just kept chugging along when Toronto and Vancouver got hammered. In this case, with the rate hikes of the last year, it's almost like Calgary didn't get the message, or that market was still doing quite well. It's put on pause, but it's really heating up again. I mean, sales in May in Calgary were nearly a record for that month, and that's one of the hottest months of the year. So, compared to Toronto and Vancouver, which are still below average, Calgary's doing really well.
In terms of how fast houses are moving right now, do you have a sense of that, between listing time and by the time they actually, get sold?
Yeah, I mean, you can calculate days on market, but an even better way to measure how fast things are moving is the sale to list price ratio. And what we've seen is, from the beginning of the year, that was about 95%. Houses were sitting for 20 days. They're getting lowball offers. And by last month, you list a home for sale, you're probably getting a firm offer that day. And it was getting to the point when, and I know from talking to realtors that people with the sort of more affordable starter home stuff, there's a lot of attention on these days, were starting to put in offer days and saying, we're going to accept offers on such and such a day. It's not like it was during COVID where you're guaranteed to get 10 offers. So my understanding is that in those cases, if you got a really good preemptive offer, that would be a sort of a bird in the hand that those sellers would be willing to take. But it really is at that tipping point right now. I just don't know how much further it's going to go in that direction, or whether we're going to sort of settle in around where we are here.
What's your sense of people listing and then delisting? They think they're, they put their foot in and they don't like what they're getting themselves into and decide, this isn't the market for them.
Well, I'm not so sure about what individual owners are doing. One thing about, I don't know about delisting, I'll tell you something about not listing. One of the most striking features of the market in the last year has been new listings every month have fallen off a cliff like nothing else that we have in the historical record. And, sometimes as analysts, we have the what, we have that view from 10,000 feet. Sometimes I'm not around the dining room table to understand the why, but just the last month it's finally occurred to me, it's like, even though it's a great market to be an existing owner moving around this year, it's not like, you're not going up against 10 other offers like you would have during COVID. You can you put conditions in your offer. But at the same time, a lot of those existing owners who supply this market have fixed rates in the twos that are good until 2025 and 2026, and they're going to hold on to those for dear life. And so them making a move right now and sort of upsetting that pretty sweet situation for them is probably why we're not seeing a lot of existing owners as active as I would have thought this year.
That's interesting. Do you think that could end up pushing out a sort of wave of activity, of upgrades, of all that kind of stuff, a couple of years, to the point where, you know, people will have to renew their mortgage, so why not, you know, sell and move up at that point?
I think it's going to definitely stretch that out. I mean, obviously, there's people with variable rates now. There's people renewing now. And so for them, it's a great opportunity. But yeah, if you've got that once-in-a-lifetime interest rate that so many people covet, you know, that's something that you're probably going to want to hold on to. So it could stretch some of that activity out into the next few years for sure.